once again, a counterintuitive response. Yes, I fully expect that the auction would represent what we're seeing in the marketplace, which would mean investors should have stepped up because yields are going down. The inflation data was hot, but not necessarily surprising, but that's not the way it turned out. I give the auction a Charlie minus, a C minus, because demand was not good. Investors did not step up. So we had $36 billion of reopened tenures, the first 10-year auction of the year, and the yield 1.723. Definitely above where the when-issued market was trading, so it tailed a bit, and all the metrics were roughly in line with 10 auction average. So nothing spectacular, C minus. But considering that we are making the low yields of the year today, one would suspect that we would have seen a better interest in the auction. I think investors are scratching their heads a bit, as many are, but sometimes it's easier to just look at the landscape, and today, to me, the dollar index is what jumps out, okay? The euro currency's hot, hot, hot. Investors think if Omicron runs around the world and wreaks its damage and maybe disappears quickly, there may be better investment opportunities in Europe, and their currency's reflecting that. But I also think the reason the dollar is moving lower is because interest rates may not be moving up as aggressively. And if that's confusing, everybody should read the Wall Street Journal article today that talks about the Volcker years when rates were way too high, considering how he was attacking inflation by raising rates aggressively. This is the mirror image of those times. And sometimes the markets don't make sense, but they are what they are.